Yo, what's up guys, welcome to another educational video. Today I want to talk about something that every trader needs to have, a working, backtested strategy. Now, most traders do not have a proper working trading strategy. And I want to show you guys how you can backtest a strategy in TradingView and how you can, for example, utilize the WoodsBot Premium indicator to actually make a proper working trading strategy, which was what I did as well. I'm going to give you guys some examples of confluence you can use or what I would recommend. And I'm going to show you guys how you can use the replay tool in TradingView to backtest your strategies. Okay, let's get to it. First things first, you would be surprised of how many traders are actually trading without a proper strategy. I think around maybe 90% of people or traders actually trade without a strategy at all. They trade on how they feel, they trade on their emotions, they look at the chart and say, okay, this looks good, or this looks bad, this looks bullish, this looks bearish, you know. But what does that even mean? Like, most people do not even have a clear definition of what is an uptrend, what makes a chart look good, you know. And I think it's needed to have clear definitions and rules in order for you to be a successful trader. I think it's necessary, you know. Like, you can't be a successful trader if you do not have a backtested strategy, in my opinion. You might be successful trading 1 year. You might be a successful trader for 2 years, or 3 years, or 4 years, you know. But what about 10 years? Will you still be successful in 10 years of trading? Most people won't. Most people will not be successful. Most people will have one successful year and then they get liquidated or something. Because they might get lucky, you know. If the uptrend is bullish and you just go long every time there's a pullback, chances are that you're gonna be successful in trading. But what happens when there's a bearish trend? Okay, then you can go short every time there's a bounce, right? But what about when price action moves sideways? And price action moves sideways for 70% of the time. Most of the time it doesn't even go up or go down in a significant way. So this is where a trading strategy comes in mind. And in my opinion, a working trading strategy is only viable if it's actually backtested. Now, what does backtested mean? A backtested strategy means that you actually go back in time and test out your trading strategy that you have in mind. First, you obviously need a trading strategy to do that, and we're gonna go there in a second. And second, if you have a trading strategy in mind, you need to test it. Does the strategy you have in your mind actually work or not? Because speaking from experience, because I have been testing so many strategies in my trading career, I can tell you that most strategies don't really work. People on Twitter might try to convince you otherwise, or people on YouTube or whatever. I see a lot of people on Twitter. They are talking about certain patterns, and I'm exposing my 90% win rate strategy, you know. But most of the time they don't work. They might work for a couple of months. They might work for a year or two, but they are not gonna be working out for 10 years. Like, if you actually backtest strategies that people are talking about, that this actually works, you know, that it doesn't. For example, a lot of traders talk about you just need to buy and sell oversold and overbought zones on RSI, and you can be profitable with that. But if you actually backtest that, you will find out that it's not profitable at all, and you will be liquidated in half a year or something. I can also tell you guys that pattern trading is not the best, at least when it comes to lower time frame. On higher time frame, patterns do have a decent win rate, but on lower time frame, I can tell you guys, patterns do not work. At least in the back-tested data that I have. I tested a lot of patterns, obviously not all, but I noticed that most of them don't work. Now, what does even work? That is a good question in my opinion. In my opinion, everything can work out as a strategy, even patterns, but you can't rely on one single thing. In my opinion, you need to have multiple confluences in order for a trading strategy to work. A trading strategy is basically you telling the market, I don't care what you're doing. I don't care if you're going to the upside, to the downside, or sideways. Basically, you're telling the market, hey, these are my trading conditions for me to enter a trade. I'm gonna wait for price action to come into my levels, and if it does, I'm gonna enter a trade, and if it doesn't, I'm not gonna enter a trade. That's all it is. A trading strategy makes you not chase the market, it makes the market come into your levels. Now, what do you need for a proper working trading strategy? In general, you only need two things. You need an entry condition and an exit condition. Sounds pretty simple, but as I said in the beginning, one confluence, in my opinion, is not enough to enter any trades. You need multiple entry conditions and you need multiple exit conditions. So an entry condition is where you go enter a trade, right? For example, I'm going to show it on my screen right here. If, for example, I want to short here, right? My entry that you can see on the screen, that is my entry. So all you need is an entry condition and an exit condition. And you just need to define these two conditions and you have a working trading strategy. And then you just need to test it out and see, does it actually work? Now, what can you use for an entry condition? There's lots of ways to enter any position. You can use market structure as your entry conditions. You can use the WoodsBot RSI. You can use the confluence zone from the WoodsBot indicator, for example. Or you can use patterns as your entry conditions. Or you can use volume or volatility. And the same goes for an exit condition, right? So in my opinion, the best confluences you can use are those that make sense to you. For me, I kept it pretty simple. When I was starting out in trading, I was naturally drawn to momentum oscillators. I tried all of the momentum oscillators there is, basically, and I stuck with RSI. So RSI is one of my confluences that I use for trading. Because momentum oscillators make sense to me. Momentum oscillators always oscillate between 0 and 100. So they are always the same, you know. They are always objective and not subjective. The same goes for Fibonacci, which is another confluence that I use. And the same thing goes for the WoodsBot Premium indicator, which I always also use for my trading strategy. I use the confluence zones from an indicator because I don't want to draw my levels myself, because I'm subjective as a human, right? And I make mistakes. So all of my confluences are designed so that I don't have to basically think myself, that I don't have to analyze, basically. I don't really have to analyze for my trading. I just have to see, are my confluences there, because my confluences are not coming from a human perspective, but rather from tools that we provide, like the WoodsBot Premium indicator or like Fibonacci, that are always going to be the same, or the WoodsBot RSI that always give you the same numbers, you know. So for me personally, I use market structure, I use RSI indicator, the WoodsBot RSI, I use the WoodsBot Premium indicator, the confluence zones, I use volatility and Fibonacci as my confluences. But you can use anything as your confluence. It doesn't have to be RSI. You can use, for example, stochastic momentum, or you don't have to use any momentum oscillators, you know. You can just use volume, or you can use volume profiles, or you can basically use anything you want. You just need to be consistent with it. For me, this is what I choose. These are the confluences that I chose that make sense to me. So go through your trading indicators, go through your maybe WoodsBot indicators as well. Look at them and understand them. Understand your confluences first. Read through the confluences that you are provided. And if you then understand them, then you can use them to build a strategy around them. For example, Monday range. You can use the Monday range for your trading, which is also included in the WoodsBot Premium indicator. So once you figured out which confluences you want to use or which confluence makes sense in your mind, then you can start to look for then you can start to build your own strategy around them. Now, I'm gonna give you guys an example of how I built my strategy or how my strategy works. I'm gonna show you guys how I tested my strategy, and guys can see for yourself and basically replicate that just with your own confluences. The process is the same, the outcome is just different. All right. So for me, again, I use the WoodsBot RSI, I use the WoodsBot Premium indicator levels, I use Fibonacci and market structure and volatility. Now, basically, these are all for my entry condition. As I said earlier, you need an entry condition and an exit condition. So for me, for my strategy, it was really important that I don't really have to analyze things or have a subjective analysis of things. So what I did was I implemented market structure via Fibonacci. So you can use Fibonacci retracement in a pretty simple fashion. All you need is to be able to identify swing lows and swing highs. Now, if we, for example, go to the weekly time frame, we are on the Solana weekly chart right now. We can see, okay, we have a swing high right here, and we have a swing low right there, right? And then we have another swing high right there. Now, the only swing that is already finished is this one, right? We have a finished swing high right there, and we have a finished swing low right there. We do have a swing high right here, a new one, but the swing low isn't in yet, right? Like this swing is not finished yet. So if I go back in time, I'm gonna go into my replay tool, and I can see, okay, this swing is finished, right? It was a downside swing. Bounce action is price action is bouncing at the moment. And what I do now is I place my Fibonacci retracement from the swing high to the swing low. Now, I can see there are multiple levels from Fibonacci, right? From my back testing, I have seen that the best levels that work for me are the 0.618 towards the 0.886. These are the levels that work the best for me, which has shown the best results. So these are the levels that I'm interested in to enter a short position. Why do I want to enter a short position? Because price action is in a downside. I am able to identify a trend just by looking at the trend, right? We have a downtrend is lower highs, lower lows, lower highs, lower lows, lower highs and lower lows, right? So Solana is in a macro downtrend at the moment. So I'm looking for shorts. Fibonacci retracement tool helps me identifying these potential short areas where you get a good risk to reward ratio to enter shorts. So this is my first confluence that I use. Now price action needs to come into this Fibonacci level, and then the other confluences need to align as well. So my other confluence is the WoodsBot RSI bearish divergence. It needs to have a bearish divergence when price action comes into the zone and touches a Fibonacci level. Another confluence is that it needs to touch a WoodsBot level. It doesn't matter on which time frame, but it needs to touch a WoodsBot level for me to enter this short position. And the third confluence is it needs to have decreasing volatility on the lower time frame. It doesn't matter on which time frame, but it needs to just have it. Now, if I go back, if I now let the price action develop. Again, I'm in this replay tool, so I'm basically in the past, and we can see in lifetime how it gets into this Fibonacci zone, right? If I now turn on my WoodsBot premium level, you can see there's a confluence zone right there, right? But we are on the 3-day chart, so there's not a lot of WoodsBot levels there. So I go to the lower time frame. Again, for me, it doesn't matter which time frame the WoodsBot levels are. It just needs to be, there just needs to be one WoodsBot level. And what we can see here is the WoodsBot level was actually right where the 0.618 Fibonacci number is, right? Remember, this line right here is the Fibonacci number, but it's also perfectly aligning with the 4-hour WoodsBot premium level. So 2 of my conditions are already meeting, and then we can see also from the WoodsBot indicator that there is bearish divergence on the 4-hour chart. Right, so there's bearish divergence on the 4-hour chart. It is touching a WoodsBot 4-hour level. It's also touching a Fibonacci level. And the only thing that is missing is decreasing volatility. And what can we see here? We have decreasing volatility. So all of my conditions are met for me to enter this short position. Right? Now, what is my exit condition? My exit conditions are basically meaning where do I put my stop loss. I put my stop loss most of the times above the swing high, the most recent swing high, right? So if I enter this trade and this is my entry, in the theory of the strategy of how I built it, I should be able to catch pretty much the perfect pico top with my strategy. Now, so I can move my stop loss pretty tight. My exit condition is I usually put my stop loss above the swing high. If this is my entry right there, the swing high that I use is this one right here. It's pretty tight, but I like to keep my stop loss pretty tight. So this is where my stop loss is. But there's also different ways to do it. I can use instead of using a swing high, so market structure as your invalidation, you can also use RSI as your invalidation, or WoodsBot confluence levels. I'm always a friend of having the same exit conditions being the entry conditions as well. So if you enter a trade and you use RSI bearish divergence as your entry, you can use the divergences as your invalidation as well. For example, for example here we had the RSI bearish divergence, right? So if the RSI were to go above this last swing high, meaning it invalidates the bearish divergence, this would also stop me out of my trade. So you can use, for example, indicators also as your invalidations. And it makes the most sense, you know. This is the most efficient way to do it, and I do it this way also. This is what I do with my invalidation. But it obviously requires a lot of attention to the market. So if you don't have a lot of time, you can use your swing highs, for example, or swing lows as your invalidations for entering a trade and exiting a trade. So if you don't have a lot of time, you can place your stop loss above these swing highs, so around this level. And what are your TPs? Your targets are also the same. So the same way you enter a trade, the same way you should exit a trade. So ask yourself, if you are short in this position, where would you take profits? You need to ask yourself the questions, okay, these are my entry conditions, and you are in a short, and price action gets to a level, would you long there? And if the answer is yes, then you should take profit and get out of the position. So if my entry conditions are WoodsBot levels and our WoodsBot RSI, for example, this WoodsBot level should be a profit target for me, as well as this one, right? Like for the first profit target. And this should also be a potential profit target. So every WoodsBot level for me is a potential profit target, because that's where I would go long potentially on, right? Now, so these are all of my conditions were met for this trade. I'm in a short right now. I have my exit conditions as well. Now is the question, how do I backtest it, right? How do I backtest a strategy. So you go into the replay tool just like I did on TradingView. Then you obviously need to have your trading entry conditions and exit conditions, and you need to define them properly. Like actually properly. For example, if you only trade on the 4 hour, so you plan your trade on the 4 hour, which time frame can you use the RSI on? For me, if I, for example, trade on the 4 hour time frame, I think the lowest that I go with the RSI bearish or bullish divergence is the 50-minute chart. I don't go lower than the 50-minute charts for my RSI divergence, and you need to define that, because what happens is you plan a trade on the 4 hour chart, but then you don't have bearish divergence on the 50-minute chart, but maybe on the 1 minute. Do you enter the trade or not? You need to define this beforehand. Everything you need to define exactly. And the same goes for the exit conditions. Where do I put my stop loss? Where do I take more profits? You need to define this exactly. Write it down, and then you can backtest it. Theory craft a bit. Experiment a bit. If a strategy doesn't work out, it's not bad, Most strategies don't work. Most strategies do not work at all. So don't get discouraged if your planned trading strategy doesn't work out in the beginning. Fine-tune it. Maybe your theory is right, but maybe the fine-tuning is not there, So once you have a trading strategy in mind that you want to potentially backtest it. Backtest that strategy for maybe like 20 trades, and then you should already have enough data to tell, okay, is this strategy promising or is it not? I've had many strategies that were not promising after the first 20 trades, and I already saw, okay, the win rate is like 30%, and the risk to reward ratio is also not positive. And then you have to adjust, fine-tune the strategy, or work on a different theory on which could work for you. So, what can you measure with backtesting? For example, this is my entry condition, right? What you need to do is obviously let the trade play out. With the replay tool, I'm going to speed it up a bit. Right. So now we can see, okay, so this is current price action, right? The trade is not finished yet. So it's a bad example. But you can already see, okay, for example, what I see is this was our first entry condition, this candlewick. Price action touched our entry as well. Write that down, have that data. Write that down, that price action might retest your entry again, so you don't get freaked out. Then you can measure, for example, the time you were in a position. For example, we are still in the Solana short, it's not over yet, and it's already 10 days and 16 hours. Write that trading time, write that time down, Measure how long you are in a potential trade. Measure how much the trade went low. For this example, it went 11% down, Measure that, write that down, and give you guys an example of how I did it. This was a trading strategy that I tested. And for this strategy, I had 4 levels for longs and 4 levels for shorts. So S1, S2, S3, S4 are short levels, L1, L2, L3, L4 are long levels, right? And basically with the one I documented if the level was hit or not. And then you can see, okay, how much did I make with the trades, How much did the trade move after it hit my entry conditions? And you can see, for example, this short went 1.25% low. This one went 3.68. This one 0.56. So on, And I did this with lots of trades. I did this for shorts and for longs. I measured if price action deviated my short and long levels. I measured if the price action closed above or below my short and long levels. I measured if there was RSI divergence or not. I measured if the trade was a win or not, obviously. I measured if price action came back to my entry at some point. This is what I meant with one-to-one profit. If I didn't take profit, was price action coming back to my entry? You know. Then I measured if the first level that was hit was profitable or not. Then I measured if volatility, for example, was at extremes to fine-tune stuff, etc. So these are some things that you can measure. Obviously, you need to measure time as well. You need to measure the median, the average percentage moves, etc. So all of these things you should measure for your trading strategy. And this is just an example of what I was working on. This strategy didn't work out in the end, you know, like it didn't. But you can see how much work it can be to backtest a trading strategy. And after all of these trades, I noticed, okay, this is not working out the best for me. I need to change something. So this is what it can look like if you backtest a trading strategy. And all of this you can measure inside of TradingView. So I guess I give you guys an example of what confluences you can use, how you can measure these things, what you need to measure. Also measure your stop loss, you know, how far does your stop loss need to be in percentage wise, etc. So there's lots of things to measure and fine tune. And I want you guys to try things out, you know, try out the WoodsBot Premium indicator. Try it out. What happens if price action actually comes into a WoodsBot Premium level? What happens if you put RSI divergence into it as well? Is this already a successful trading strategy? You know, where do I put my stop loss? Measure these things. Try it out. So yeah, that's the only thing that I wanted to talk about. I hope you guys have a nice day. Thank you guys for looking at this video, going through it, and have fun backtesting. Make yourself a profitable trader, you know. Don't be that guy on Twitter that claims to be a successful trader if you don't have a proven backtested strategy. This is what all successful traders do and did. They all have data to prove they have a working strategy over the years. So don't be lazy, put in the work, test your strategy, play around with things, and use your proper confluence that makes sense to you. For me, the WoodsBot Premium indicator makes the most sense to me, which is why I use it, and I can highly recommend it to you guys. So enjoy the day, guys. Thanks for watching, and I'll see you guys in the next video. Bye bye.